Hey, welcome to the 2023 tax season. I know you're excited. We all are, right? We love to file our taxes, but I'll tell you, it's an important thing to think about if you're considering buying a home in 2023. You may want to talk to myself or someone on my team about the implications that filing your taxes could have on your ability to qualify for a home loan. So this applies whether you're a W-2 employee, 1099 contractor, or self-employed. It's really important to understand the ramifications that your taxes can have on your mortgage application. Some clients, of course, that I have might be a mixture of W-2 income as well as Schedule C. So like if you have a side hustle, for example, or perhaps you have a Schedule E with rental properties. But this is all the more reason why it's absolutely imperative to chat before you file your taxes for a variety of reasons. So today, in this video, I'm going to talk about the differences between W-2 employees, 1099 contractors, and self-employed borrowers, and the ramifications that those differences have on your taxes and your ability to qualify for a home loan. For those of you who are W-2 employees, your taxes are actually pretty straightforward, pretty simple for the most part. I mean, your employer withholds a certain amount of income from your paychecks throughout the year, and then you receive a W-2 form at the end of the year that shows your total earnings and taxes throughout the year. When applying for a mortgage, though, lenders want to see that you've had consistent income and a solid employment history. Typically, you want to see about a 2-year employment history. If you've had more than a couple of jobs over the last 2 years, that's okay as long as they're in the same industry or doing the same sort of work typically. So your W-2 is going to provide the information that we need to help establish an income level, which will be a key factor, right, in determining how much mortgage you can afford. Now, if you have variable or commission income, it gets a little trickier. We have to average it out typically over 18 to 24 months. A 2-year average is normal for most lenders. We're required to use that as a stable and predictable income source. So we'll discuss these options and how that affects you, once we have a chance to chat. Now, if you're a 1099 contractor, your taxes are going to be a bit more complex. So unlike a W-2 employee, you're responsible to pay your own taxes, and this includes self-employment tax. So when applying for a mortgage, lenders are going to want to see proof of your income and your 1099 forms that you got. They look similar to W-2 forms, but they say 1099 on them, along with your most recent current 2 years of filed tax returns. And this will provide enough information for us to be able to see that you have consistent income and to be able to average it and a good track record of payments from clients as well. So similar to self-employed borrowers, there are some items on a tax return that you might be able to write off if you're 1099, but that we could add back into your income or vice versa. Meaning, sometimes you may have to deduct off your total qualified income some items which could impact your total qualification to repay a mortgage. So this is very specific though to each individual's tax return. This is another reason why we like to look at your tax return specifically to see how the numbers match up, and we can reverse engineer it going backwards to help you understand how many deductions you should take as far as expenses on your taxes or not, so that you have enough net income to qualify for the mortgage that you want. Now, for those of you who are self-employed, obviously your taxes become a little more complex. In addition to paying your own taxes, you also need to keep a detailed record, of course, of your income and expenses throughout the year. This can make it more difficult, right, to prove your income to a lender, but it's not impossible, especially with a lender like myself and my team. We're not afraid of tax returns. I've done hundreds and hundreds of tax returns for self-employed borrowers, reviewed those tax returns, and to be able to help my clients move forward with a solid home loan approval. So I'm not afraid to dig into the nitty-gritty details and understand the complexity of both corporate and personal tax returns. So please don't be afraid to talk to me about that. That's simply something that me and my team are very good at. In fact, I do a lot of them. So just because they're complex doesn't mean qualifying for a mortgage has to be. I'll make it simple. In conclusion though, your 2022 taxes really can have a big impact on your qualification for a mortgage. In 2023, no matter whether you're a W-2 employee, a 1099 contractor, or self-employed, it's important to understand the impact that your taxes can have on how much you can qualify for, and then take steps by, like I said, reverse engineering the math to ensure that you're in the best position financially possible when applying for a mortgage. So if you have any questions or need any help with your taxes or reverse engineering that math, please don't hesitate to reach out to a professional like myself, for assistance so that you're ready to purchase the home that you want to buy. As always, please like or subscribe to my channel here on YouTube for more informative videos coming up soon. Looking forward to continue to share these tidbits of wisdom with you. Talk to you soon.